Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Happy Thursday. Today feels like a Friday to me, but it's only Thursday for some reason. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. Man, I got a lot on my mind today. I'm excited to talk about the return of the department store. Yes, who's with me? We're going to talk about that. We're going to talk about Robinhood. We're going to talk about Nvidia. We'll get to some questions from our chat. A lot going on, as I said. Before we throw it to Joel and Joel's charts and Joel's levels, we have to talk about the T word. No, not transitory. Not transitory. The new T word is tapering. Yes, we're going to talk about tapering today if we don't fall asleep first. Anyway, that'll be our show for the day. Before I throw it to Joel and Joel's charts, guys, have you seen, and I'm talking to the two of you now, have you seen the trailer for the Saturday extravaganza? And if not, do you want to see it?
Yeah, I want to see it for sure.
You haven't
a trailer for this?
You haven't seen it yet?
It took me several hours to put this together.
All right, here we go. This is for the Saturday extravaganza.
Let's see it.
There we go.
Well, that's cool.
Link is.
I'm impressed. Joel, you put that together?
All by himself.
Dennis, you got a new dance
I challenge whether Joel put that together.
And you are 100% correct. No, big thanks to Mitch and the video production crew. I don't think I could do something like that if my life depended on it, actually, to tell you the truth.
That's
here.
Mitch's skills right there.
Yeah, man. That's what happens when you're young. You know, you learn that stuff. They didn't even have computers when I was in school. But, yeah, folks, go and sign up. Dennis is going to talk a little bit about what's going on today in the markets. I'm going to do a quick recap. And we're getting smoked here on the futures. We're down 42 handles. The T word came up. Didn't spend much time on the close. Not often do I have to adjust my numbers, but your July 22nd low is 43.4150. If you're looking for a target under the pre-market low, crude loses 65. It trades under 63, down 237, 62.84. I do have some green on my screen, and that's gold up 450 at 17.89. Silver, man, that's down a nickel. No one needs silver anymore at 23.33. Bitcoin, it's going with the market today. Not as, more on a percentage basis. Down 690 at 44,165. Ethereum backing off too. That's down $64 at 29.68. Triple D, you know, on days like this, when I wake up in the middle of the night and I see the activity, I'm like, is Triple D hedged? Is he okay? Is he surviving? And it's actually the exact opposite.
Why? I'm not hedged? I'm not surviving?
No, you are hedged, and I don't need to. I don't need to worry about you. I don't need to worry about you anymore.
He's dead.
I don't need to worry about you anymore.
Well, you don't need to worry about me, Joe. I'll be okay. But typically these and this is what we're going to talk about on Saturday is my style. I'm not a long only trader. Majority of your retail traders there are long only. I'm what you call a market neutral trader. I trade market neutral, meaning I try to minimize the market risk. I try to take the market risk out as much as possible. So on a day like this, it doesn't impact me that, I'm getting killed on all my stocks. In my long-term portfolio, I'm getting killed on all my stocks. Retirement account, I am long only. In my trading account, it is almost always hedged. I might have a market bias and I might put a little bit long or a little bit short, but for the most part, I'm usually hedged. I was hedged overnight, Joel, so you don't have to worry about that. And So far, so good. The hedges are working. I'm actually up this morning on my overnight trades, so which is a good thing when the market's down 1%. I mean, this is just a different style of trading. Rob Friesen's going to talk about this with stock odds. We are quantitative traders looking to extract alpha from market inefficiencies. Typically, my P&L isn't linked to whether the market is going up or down. It's linked to how much the market is going up or down. It's linked to the VIX. So volatility starts rising. Typically, my P&L will do better. Yesterday, we don't know how today is going to work out. I do have some overnights, but so far so good. Yesterday was my best day in 2 months. So this morning, it's looking okay as well. I'm not out. I still have 50 positions on overnight, so anything can happen. There could be news hit one of my positions, but so far so good. I'm green on my overnight so far. So the hedges are working. But this is just a different style of trading. And I mean, everybody who started in the last year has been spoiled. We've been in this relentless bull market. We haven't even had a correction bigger than 4 or 5% in the SPY. So, it's been easy. It's been easy pickings if you're a long only trader. You might have started and you'd be like, wow, this is so easy. I'm so good at this. I started the same way in 1997 when I started trading. And I was in a relentless bull market, and we went straight up in 1998, went straight down up in 1999, went straight up in 2000. And then 2000, obviously March 2000, the top happened, and then we had 8 years of pain. So I don't know if we're going to 8 years of pain. It's not my job to know that. It's my job to minimize market risk. So am I making as much as a long-only trader in an up market? Probably not. But if I was just long-only and didn't have any shorts on, I would be doing better. But when you've got the market oscillating or doing, days like this, when the market's going down and everybody else around you is losing, a lot of prop traders are actually making more money simply because they're hedged.
All right. So should I renege on the Pump and Powell moniker? Do I have to come up with something new? I mean, the T word came up and it wasn't transitory. So the Fed, when are they going to make a move? I mean, that was the thing when we talked about what could potentially hurt this market and its higher interest rates, right? And they talked, well, I don't even know if they talked about moving rates, but less bond buying, and people just hit the button on that one. I mean, there was absolutely no hesitation in the market selling off. I don't know what really other factors we can attribute this decline to. I mean, China's not helping things, but rates, they're changing. What are we going to do?
That's it. Maybe by the end of the year, they're gonna taper. Well, maybe not rates, but maybe it's the asset purchases that could taper.
Right.
By the end of the year is what the minutes that came out yesterday sort of hinted at. And we know that any minuscule hint of a change in the wind in the way the Fed is leaning has the power to move markets like it's doing this morning. So that's your headline, is the minutes hinted at there is some I don't want to call it, maybe mild enthusiasm on within the Fed to begin the tapering process. But now what comes next is now they have to signal that we're going to start tapering at X date in the future. We haven't gotten to that part yet, and so we're in like stage one, which is like we're thinking about it. Now we have to get to stage two, which is like we're thinking about it, and we're not at stage two yet. But that's basically your headline, as Joel said, is the big reason, the big macro headline this week, and that is you could say that's why we're down.
Just remember one thing before you go and sell all your long-term portfolio, for the massive correction that everybody's predicting now that we're going to have, is that the Fed is not data dependent, they are market dependent. And if we start to go into a significant sell-off, the Fed will calm those tapering concerns in a hurry. So that's the tough thing to be a bear, to be a long-term bear. And like I said, even though I short stocks, I'm not a bear. I'm not short my long-term portfolio. I was bearish back in March of 2000 because I thought or March of 2020, because I thought, this COVID was going to get. And that's when I was actually, hedging my long-term portfolio, which I rarely do. I'm not hedging my long-term portfolio. I have a lot of cash. I've raised cash, but I raised cash 2-3 months ago, which was the wrong move. I was trying to deploy a little bit of that cash yesterday. I bought a couple of stocks, probably too soon, obviously, because market's selling off. So those aren't doing as well. But just, it's hard to be a long-term bear knowing that the Fed, if the market starts to sell off significantly, the Fed will change their tune. And then that will prop the markets back up. So I'm not in the camp that I'm going to go sell all my stocks here. We're going to have a 30-40% correction or 30% bear market, and we're going to get killed. I think we start going down 5-10%. I think the tune changes again. So I'm looking at stocks that have been really beat up, and I am putting a little bit more into the long-term portfolio. I've brought that 40% cash position probably down to about 35% in the last few days. Am I going to go all in? I never go all in. I always have like 15-20% cash, but I've got a little more. I've definitely got some more ammo there if I want to buy some more. But I was doing some nibbling. I bought a stock yesterday in the long-term portfolio. I bought Scott's Miracle-Gro, SMG. Look at what this stock has done. I mean, this is, was a cannabis play, but before it was a cannabis play, it was just a fertilizer, but they gave it the cannabis love. But I mean, this stock went from $150 back in November to $250, and now all the way back to $150. The PE is reasonable. It's got a little dividend. I kind of like the stock. So I was like, you know what? The one I bought at 152 yesterday, it did go up to 157 shortly after I bought, which is nice. 154, it's probably going to be back down to where I bought it today with the overall market sell-off. But, a little piece of Scott's Miracle-Gro in the long-term portfolio. I don't think farming is going away. I don't think cannabis is going away. But, they say this is a cannabis play, but this is a fertilizer stock. It was before it was a cannabis stock, it was $100 fertilizer stock.
That's convenient. So when it's at 150, it's a fertilizer stock. When it's at 250, it's a
cannabis stock.
Cannabis play. That's so convenient.
So if the cannabis stuff starts to get hot again, you have like almost a call option on this. You pretty much, you're good on the fertilizer. Well, you're never good. You don't know if you're good. But I'm saying this is been priced in from 100 to 150 as a fertilizer stock. When it's going to 250, it was a cannabis play. So they kind of took the cannabis premium back out of it. So now you're just getting the fertilizer play. But I don't think fertilizer is going away. I don't think farming is going away. I don't think cannabis is going away. And they're pricing this, it's got hit pretty hard here. Now it's come back to a reasonable valuation. At 250, wasn't reasonable. At 150, I was doing the numbers. Looks good to me. So I put a little piece in the long-term portfolio of this stock yesterday. Not a trade. If you're following me and it's not a trade. This was in the long-term retirement account, SMG long-term retirement account, not in my trading portfolio.
When Triple D talks long-term, I'll talk long-term too. And you're coming up in an area where you have basically 4 monthly lows. It's a little bit lower than here. But this 143 to 147 area, I mean, you're coming up on monthly lows, 4 of them in a row. So we'll see. Maybe it has a little bit more doing the downside. We could always look at the daily candles and see how they evolve. But, I just don't think, unless you have some crazy market action, that this thing is going to, drop to 120. It's already been beat up pretty well. I just wanted to just go back real quickly on the interest rate thing. Yeah. Folks, we are at historically low interest rates, right? And they're never going back to where they were, back in the old days. And still, investing in the market, I mean, it's still, until things change. You're not going to make any money putting your money in the bank, and you're not, that it's a different market. So even if the rates do go up a little bit, on a historical basis, they're still so low. So it's not a big deal. And I think Dennis is right. You get some weak numbers and the Fed will back off a little bit. One thing, Pumpin' Powell, he did a good job during the during the pandemic. So this is a little bit less of a task, in my opinion. But let's move on. Do we want to do some earning stocks first? Get them out of the way?
I don't, and this is one thing we're going to talk about on Saturday here too. Earnings matter, but as volatility picks up, the market matters more than individual stock news. It's like, you see this algo running off the SEC filings lately, and they say, oh, insider buy, and the algo will pay up 1% for a stock, or maybe even more than that, off an insider buy. That algo, whoever's running that, is honestly a little bit of dumb money, because when you have markets in turmoil, and not that they're in turmoil, but when you have volatility picked up, they don't care that an insider bought a stock. So there was a lot of opportunities even last night where you're seeing an insider buy hit the SEC filings, the algo bids it up, and savvy traders are saying short to you, because you know what? It's probably not going to matter that that insider bought some stock, unless it's a really an outsized position or a stock been getting absolutely killed. There's not going to be a lot of people caring the next day. People are caring right now about the market getting rocked. They're not looking where to make money. They're looking where to save money. Maybe they're looking to buy the dip, but are you going to pay up 2-3% today because an insider bought a stock? Probably not. So even upgrades and downgrades start to not matter as much when market volatility picks up. Earnings do matter, but the market sentiment will impact that as well. We talk about that all the time too. The market's getting rocked. You don't want to be reporting that morning a good quarter. I mean, Nvidia numbers, which we could go to right now, was a pretty good report. Stock is barely up. Why is that? Probably because the market is getting rocked.
Wait, Joel, can you just pull up a chart of the VIX real fast? I just want to point.
So, I always.
It's like slash. It's like slash VIX, right?
No, it's not slash.
It's at VIX.
No, it's something weird on TradeStation. Hold on.
All right. Well, whatever. The point still stands that the VIX is at 24. Okay. We were, right. And Dennis always says he doesn't need the VIX to tell him volatility is going up. But
yeah, same thing. Yeah.
But for the rest of us, that's the point of it, right? Is to tell you when volatility is going up. So the VIX has gone up. We were at 18 a couple of days ago. We're at 24 now. The VIX has been steadily declining for basically since COVID started, right? We had that spike up in March, and it's been steadily declining since then. We've been in a relatively low volatility environment for a lot of this year, and what we have here is we have ourselves a good old fashioned volatility spike. Doesn't mean it's sustained. Doesn't mean it's going to sustain itself, but that's what's happened. We've got 2-3 days here, 2 days now plus this morning of downward action across the board. Pretty much across the board. And so it's just something to be aware of,
Yeah. All right. Dollar sign.
VIX.
Yeah. Dennis, you can give your own sentiment on this, but it's not working for me. Maybe it's dollar sign. To me, like the VIX, if you're trading it like as a hedge and you're trading the low volatility, you could get it. And then there's these spikes, okay? And if you don't get out on the spikes, within it just evaporates on you, and it comes right back down. Where if you're trading stocks or futures or something, there's volatility, but you have more than one chance. You can have targets, you have things like that. So for me, I look at the average daily range in the S&Ps. That's my own personal VIX. And, from the when we, the pandemic meltdown, we went, 150, 175, 200, 220 for the average daily range. And then as the market turned, it started to come down, and now we got compressed. And now we're down to an average daily range of only 35. So when we had that update on Friday and we had a 12-point range, I'm thinking, whoa, there's buyers up here pushing it, but you know what? The sellers aren't letting it get very far. And that's kind of what this market's felt like lately. It's like, yeah, I'll put my order out at 150 in Apple. I'll let you take me out, and it can go to 150, 1.5, but I'm out. I'm selling a chunk of stock. We saw that formation in Disney and institutional distribution as opposed to accumulation. Now the average daily ranges are expanding. Now it has my attention.
And people want to naturally just buy the VIX as a hedge. And yes, that can work to a certain extent, but we know these products tend to drift down
to zero.
I short stocks. Most people don't short stocks, but for the most part, I short indexes too. If you're nervous about the market, instead of buying some TVIX product that deteriorates over time, and instead of buying a triple levered, you could short some SPY, you could short some IWM. You're not going to get Reddit squeezed on SPY. You're not going to get Reddit squeezed on IWM. So that's just basic. And we're going to talk about all this on Saturday. What's the best hedge? But I've never, SQQQ or whatever they are, I never buy those things. Never. I would just short QQQ. If I wanted to be triple levered, I'd short 3 times more QQQ. So these products are designed for hedging vehicles for people who don't want to short stocks and don't have a margin account to short stocks. But I mean, you can easily open a margin account too. And if Robinhood or whatever your broker isn't allowing you to do it, then you kind of get what you pay for. You got free trading. You're not going to have all the tools that everybody else has. But it's the type of market. I'm not telling everybody to start shorting stocks. I'm just saying when you're nervous about the market, you can keep on some of your long, or you sell your longs. That's another way to be hedged too, and you raise cash. There's lots of different ways to hedge yourself against market risk. But the tea leaves have been on, like if you're getting rocked in the last week and you're like, what happened? There has been warning signs about a pending sell-off here for a month. Tim, obviously has been coming on this show on Monday and warned you for the last 3 Mondays, looking, what his indicator is looking at, saying, we're due for, it's looking like, not to be long right now. We've been saying it too. The only thing that's been holding up the market is Apple and Microsoft and Google, and the FANG stocks. And they started rolling over yesterday. And lo and behold, oh my gosh, the market's going down. The market is Apple. That's the S&P. But we've been looking at IWM for a while. IWM has been going down for, basically the last month. That's a better indicator of what stocks are doing overall. But again, am I throwing in the towel and selling all my stocks today? No, I think the time for selling was was 2-3 weeks ago, 4 weeks ago. I mean, I was raising cash 2 months ago. I was a little bit early. And the stocks obviously kept going up.
You were early and Tim was early because Tim has been.
We were both early.
Yes.
So you could kind of feel that we just weren't getting anywhere, even though SPY was grinding to new all-time highs. It wasn't like rip, roar, and rally. Everything was going. It was like, oh, Apple's grinding itself a little bit higher. So there was lots of warning for this. And I think you just got to be careful and understand, that markets don't always go up, and understand what your risk of your trading portfolio. Understand the risk of your stocks. If you're all in on one meme stock, I mean, there's a lot of risk in that. Somebody saying PMCB just killed me. This is a stock that, is just going crazy, PMCB. This is a stock.
You can't control the risk in a stock.
How do I control the risk? You know how many trades I made in PMCB? You know how much this is in my filter? It's in my filter continuously. I didn't even know the story, but I'm like, I'm not trading something that's moving around 200% a day. I've got to control the risk somehow. I trade the mega caps. I trade a little bit of mid caps. I trade stories. I'll trade some smaller caps too. But something that's just wild and moving around, like the Robinhood going from 40 to 80 in a week. Yeah, some people made a lot of money in that. My job is not to make a lot of money. My job is to make a living. I don't have a full-time job. It's only trading. If I'm going and losing, a whole pile of money on a stock like PMCB, you're not going to be able to pay the bills. And I have a lot of bills. So, I've been trading a long time. So it's a difference between trading for a living and trading for fun. If you're trading for fun, trade whatever you want. But if you want to do this, there's a lot of traders that think they can, pack up their job, quit their job, and become full-time traders. You got to be able to trade the down markets too. That's what we're going to teach on Saturday.
All right, I don't even want to discuss. Do you want to hear the spiel on PMCB?
Well, it's pretty wild stuff here. So if
Sure.
you're following the story, they uplisted to the Nasdaq. I think it was like August 9th or 10th. They uplisted to the Nasdaq, and in the process, they did an offering, which is totally normal. As one does. They raised this is an early stage biotech company, so they did a 3.5 million share offering at 4.25. That was like 10 days ago. They did that. Okay. For whatever reason, it escapes me why. Here, you have the chart up. Stock goes up from $3 to like $11 yesterday. Or not quite. Yes, not quite 11. Well, no, it got to like 9, and then in the after hours, it got to over 10. So what do? They do another offering, as you're wanting to do, but this one is a direct offering at the market. $70 million direct offering at the market. So if you're keeping score at home, they raised it was like $14 million 10 days ago, and they're doing $70 million raise today. So that's like $84 million, and their market cap is $50 million. So they've raised more money than their market cap in the last 10 days. So now we've got a stock going from 12.5 this morning at 4 a.m. to $4 right now. I mean, this is what happens. Why did it go from 2 to 10 in the first place? I have absolutely no idea. Boggles the mind. There's no news. There's no.
I'll tell you, for me, just look, I pull up this symbol.
Low
The
float.
first thing I look at, now I'm just going to tell you, and then this is going to be my last comment on it. I see the stock has an all-time high near 260, right?
Yeah.
And it's at 990. So either it's just one pig of a company, or it's really a pig of a company, and it's done reverse splits. So no matter what kind of news, no matter what I see, no matter what technical information I want nothing to do with this stock.
Not from a long-term investment standpoint.
Right.
Yeah, there's
Right.
too much risk.
Right. It's got 5 million shares outstanding, right? So
let them play. Let other people play with that stuff.
And that's what people are naturally attracted to. People don't want to, they want to get rich fast. They want, how do I double my money? I get this question all the time because people know you're in the stock market. Like, oh, I got $1,000. Can you make me a few grand on that? Well, one, I'm not taking your money because I can't take money, with Bright Trading. I can't take other people's money. But two, they just think, oh, I turn $1,000 into $4,000. I don't turn $1,000 into $4,000 overnight. I use Bright Trading's capital, which is significant, using millions of dollars in capital to make a good living. And if you can make, if you're using, let's just say hypothetically, if you were using I don't know how much capital I'm using, but let's say you're using $2 million worth of capital. If you're making 10% on that, you're making 200 grand a year. If you're making 20% on that, you're making 400 grand a year. If you're making 30% on that, you're making 600 grand a year. If I was making 300, 400, 500% on that, on 2 million, I'd be making $10 million a year. The types of strategies, that I'm running are not going to make you, 500, 600, 700% in a week. The types of strategy I'm trying to grind out. I enter a trade for a 0.1% edge. And sometimes I come in and I'll make 1-2% on something, But if you can grind out 0.5% here, 1% here, 0.5% here, 0.2% here, all those percentages add up. And by the end of the year, I did pretty good. So, but just expecting, that, this is, 2020, we're going to buy some stock at $5 and it's going to go to $50 and I'm going to, make 1,000% of my money in 3 months. It's unreasonable expectations. We've been spoiled. And, 2021 has been a little bit of a wake-up call for a lot of those people.
At least in the last 6 months, maybe not January, but
yeah. It was unbelievable. People coming in March of 2020, if you were buying stocks in April, May, June, you made a lot of money. I did too. Easy. My portfolio did really well.
It was so easy. It was laughable. I thought
it was so easy. It was laughable.
I thought I was a genius. Everyone thought they were.
Everyone.
Yeah.
I didn't even touch my long-term portfolio. I told you, but I looked in January. I was up on 97 out of 100 stocks. I was like, oh yeah, I'm just really good at this. No, everything was just up. I wasn't good at that. I didn't become, the best investor ever, and I only lose on 3 out of 100. I was just benefiting from everything being up. Well, we're not in that market anymore. We're not in Kansas anymore. We talked about
I knew you were going to say that.
You've got to be able to adjust your trading strategies for the environment. Long only was working fabulously. But, I'm grinding. You got to grind. Professional traders grind. Citadel? Grinding. You think Citadel's coming in making 1,000% of their trades? They're making fractions of a percent on very, very many trades, the tune of 20% of the market's volume. They're grinding. They're grinding. They're making the spread. They're picking up pennies. They're picking up fractions of a penny. They're grinding. But you know what? They make a lot of money by grinding it out. And, we have a lot of traders that make a lot of money grinding it out. So, it's a different style of trading, and I'm not saying one's better than the other. It's what's suitable for you. But if you're going to come in and just be a long-only trader and you expect to make money every single day, that's an unreasonable expectation because you're going to have markets that are not going to cooperate with your long-only thesis.
Yeah. Okay. Let's move on here. Let's talk some individual stocks besides PMCB. Let's talk Robinhood. Okay.
Hood.
Great quarter was the takeaway. Questionable guidance. So the quarter was okay. There were some weird adjustments going on there. So the EPS is not comparable. Their sales came in above estimates. Monthly active users more than doubled year over year. Pretty crazy. They went from like 10 million to 21 million. In 1 year. Average revenue per user down a smidge. Interesting, crypto revenue grew a lot, but 62% of their crypto trading revenue came from Dogecoin. Is that sustainable? Probably not. Here is the money line, though, from the press release. They said, and I will quote here, For the 3 months ending September 30th, we expect seasonal headwinds and lower trading activity across the industry to result in lower revenues and considerably fewer new funded accounts than in the prior quarter. This has been bugging me all night. What exactly is seasonal headwinds within the context of trade? Is that going back to school? Is that what that is? Is Robinhood saying all these kids are going back to school and they're not going to be trading all day? Because what does seasonal headwinds have to do with
That's interesting.
new account creation for a retail trading app? I'm genuinely asking because I don't know. Like, what is seasonal headwinds? Is it going back?
Maybe we should ask Robinhood that question. What a context. That's an interesting question. What do they mean by seasonal headwinds?
Is seasonal headwinds going back to school? Because what is different about this quarter versus last quarter? I don't know. Anyway, it's been bugging me all night. But that line right there, they lowered the bar for themselves going forward. They said we expect lower trading revenue and trading activity across and less funded accounts across the board this quarter for the current quarter. They lowered the bar. That is your biggest takeaway from the earnings report last night.
Joel, I'll let you handle the seasonal headwinds conversation from Robinhood. I'm just going to say, and then I'll let you guys talk it. I'm just going to say Robinhood has been in the best possible environment ever. Possible. Everybody sitting at home, not knowing what to do, jobs, they didn't want to go to work. They had this huge bull market. Everybody's like, I can make it, as a full-time trader. They are benefited from the bull market probably more than anyone. So if we do go into a market, I'm not saying the bull market's over. I don't know where it's going. So I'm market neutral. I don't know. But I'm not full on like rah, bull that we're going to, S&P, 6,000 or 7,000 or Dow 100,000 imminently here. So they have benefited huge from a bull market. If we go into a market that shops around for a prolonged period of time, you will lose accounts.
Get killed.
They will lose accounts. They will have people saying, crap, they were all in on some meme stock and they're getting hit. They will start to see some decline, and it is priced for perfection. So would I own Robinhood in my long-term account at this valuation, which is bigger than the majority of major brokerages out there? No, I would not touch this in my long-term account. Would I trade it? Yeah, I trade it. I try it off a bottom. I try some different things. Am I looking to buy the dip on Robinhood today? No, it's trying to catch the falling knife. We're coming back to, do we get back to the IPO price? What was the IPO price, by the way, Joel? Do you remember?
38, remember?
So that's probably going to be your next logical stopping point, I would think. You've come a long ways from the $85 when everybody just got stupid, and that was dumb money up there. There's no other word for it. Now you've come back to reality. 38's a logical bounce point, but is this going on my long-term portfolio? No, the valuation is just absolutely insane, and it's priced for perfection.
Oh boy, I don't want to spend a lot of time on this, but
Okay.
Fourth day of trading after a crazy gain, insiders sell $198 million in stock, and a bunch of them. If people know the company from inside the company are doing that, what does that tell you? 4 days after the IPO. And after the crazy price action, after that, it's been lights out for the stock. I can just give you some short-term levels. Pre-market low is 42.72. The dailies don't give you much. You get down to 37.16 on the dailies at 33.25. But I think you hit it spot on, Dennis. Like the best possible environment. And when the environment got a little rocky, like with the GME, remember that? And they had to basically shut people down. And someone came out and bailed them out. I don't know who it was or how much money they gave them. Is someone going to do that? Someday there's going to be a situation like that again. And are people going to be willing to cut the check again on something like that? So,
well, you hope the risk management that they're not going to get into a situation.
I really hope it doesn't happen.
They're better collateralized here. That they're not going to get in a situation
I sure hope
where the
so.
trades aren't going to clear.
Fool me once, shame on me.
I would hope they learned something from that experience. But it's quite scary. When you have a situation where everybody's all in on just a couple of different names, the majority of their clients, and and obviously maybe it's a squeeze, maybe whatever it was, but when they get into a situation that they're worried about their capital requirements that they've got, and even if it's short term, it's scary. But that's not the situation at Robinhood now. You hope they've learned from that. My beef with Robinhood is the simple fact that I think the stock is just priced for perfection, and I think it's been a perfect environment, and I don't think that perfect environment is going to continue for them. So that's why I don't want to own Robinhood in the long-term account.
But I have to hop a few minutes early, so before I leave,
You're leaving us.
Well, just
a few minutes early. It's 8:36.
No,
authorize
I'm not leaving yet. Before I do, I got to go prepare to MC Day 2 of our reopening stock summit coming up next, by the way.
Good timing on that.
But before I leave, I just want to talk about Amazon for a second here. Okay, can we go to Amazon? Because actually, and let's talk. We'll talk Amazon, Macy's, and Kohl's all together.
Ooh,
because I'm putting my foot in the ground. I'm planting my flag right now. The department store is back, baby. We are back. Kohl's had good numbers this morning. Macy's had good numbers this morning, and the coup de grace, the creme de la creme, the cherry on top, Amazon getting into the department store game.
What is the Amazon headline? So tell me about this Amazon headline.
Amazon's going to be opening their first department stores in Ohio and California. This is according to anonymous sources from the Wall Street Journal. The stores will be around 30,000 square feet, so not quite the size. Your typical Walmart is 100 to 150,000 square feet, so like a third to 1/5 the size of your typical Walmart / Target, whatever. So it'd be around 30,000 square feet. It's a little bit smaller, but they're going to offer obviously Amazon branded products and who knows what else? It could be anything, right? There could be drones flying around the ceiling for all we know.
That sounds pretty cool. Amazon store. So they're trying to go basically head to head with Walmart to a certain extent. Obviously, we know they've got Walmart whipped in online commerce, but they're trying to say, hey, maybe we can take them on in the physical brick and mortar too. I think that's what they're saying, and it would not surprise me if their stores actually do pretty good. It's an interesting. I mean, Mitch, you were saying I think this is like a test. Obviously, it's just to see if they can do it. But Walmart's very successful with brick and mortar. Why couldn't Amazon be an Amazon superstore? I kind of like it.
I just want the store.
I like the test.
For all we know, it's going to be. It's not really so much about the store itself. It's about the technology in the store, right? Like for all we know, there could be holograms. There could be drones flying around.
You like the idea of what Amazon's going to come up with.
Oh, absolutely, I do. You know what? I could walk in and they scan my retina, and then my grocery list pops up in a hologram, and then it follows me around the store. And
when I pick up all your stuff,
when I reach onto the shelf to pick up my can of soup, it gets crossed off the list, my hologram list. Yeah, I mean the possibilities around this here. Obviously,
you should go work for Amazon.
I should. Obviously, it's a test, but here's what I actually think. I actually think that 5-10 years down the line, Walmart, Amazon, Target, tomato, it won't matter. They will be the same. Right, and Target and Walmart have been chasing Amazon online for 20 years. Amazon is not chasing them in brick and mortar. They're gonna be the same store. They're gonna be everywhere, and they're gonna be the same. My thesis is bet on the biggest players in every industry, and those are the big get bigger, and everyone else is screwed. And Walmart, Amazon, Target are your biggest players in retail, e-commerce, and brick and mortar. And it's going to stay that way. They're going to be the same store is basically what it comes down to.
Target's getting hit here again this morning. It actually got hit all the way down to 240 in the pre-market. I guess that's on this Amazon headline, I would assume.
Yeah.
So interesting enough, Walmart not getting hit nearly as hard as Target. Target's had a bad couple of days. One, the earnings report was not that bad, but the market didn't care for it. Ooh. And now, two, you get Amazon going to go and piss in their pool to a certain extent. So 240, that's where you got down in the pre-market where somebody got really excited overnight on Target. Walmart holding up much better than Target, but Target's had a lot bigger run than Walmart as well. The bait on Walmart is also less, so just understanding that is the reason why Walmart's not going to be down as much as Target. But I don't know, it's kind of scary if you're just long Target after this huge run. Is this a buying opportunity, or is this if Amazon starts to come in and actually open physical stores, this is not good for Target.
A couple things on this, just regarding the Amazon. I guess I would call it a positive and two negatives. The positive is like the biggest expense of these of retailers is the real estate, right?
Mhm.
And what you used to pay at some of these malls and everything, outrageous. So the good news is they're coming in and they're just going to be able to get just some deals, right, on the real estate. And that changes the whole operation. It changes the margins. So that's the bullet. I would say, yeah, long term, this could be a really bullish move. The bearish things, number one is, man, they're going back. Are they going backwards by going into stores? Their model was built on that. So changing their tune, if this is perfect timing of it, fine. But the last negative is the chart. And this thing, sucked people in, had the big run, then they just whacked it, and you just continue to make new post earnings lows. So if I was all excited about this thing on the breakout over 3,500, I wanted to buy it when it came back there, and several times, and I did it. Now I think I'm gonna wait. I'm gonna wait for 3,000. That was the bottom of the trading range, and that's where I feel your risk is. So I don't know. It's two negatives and a positive for Amazon.
Okay, last thing I'll say on this, if you were, and I've said this before, if you go back to the day that Amazon announced they're buying Whole Foods, it was June 2017, okay? Walmart stock fell 5%, Target fell 10%. That was a long ways ago, okay? And that was when Amazon...
We have some precedents here, though. Makes me see a 1% fall, and I'm like, yeah, I'll not buy the dip on Walmart.
Okay.
Losing 149,
I'm not saying
folks.
it's going to fall, but I'd be too scared to, And
keep your
Walmart's
eye on
obviously held on very
149.
well here.
Absolutely has to get back above 149. We talked about this, Dennis. I hope you're able to whack it in the after hours when it went through there. So right there, 149, your long-term number for Walmart. Resistance to take. Got to get above it and hold it or not. There's not a lot here. Stopping it down maybe 140, 142 area.
All right, I'm going to hop off. I have to go prepare to end.
Few minutes.
Left us early.
What's a few minutes?
I'm so
18?
offended.
A few. Yeah, that's what.
18 is a few. You said a few.
That's what it is.
All right. Let's bring in the 18. Let's bring in the 18.
That was just horrible.
Yeah,
you
can go ahead.
Here. We got backup. Bye, Spencer.
Bye, Spencer. Jason has to talk with you later on.
Yeah, he'll have a talk.
We'll get Raz to get him on there.
We got Money Mitch here. We got Money. What's up with Money Mitch?
Whatever happened to Raz on Friday?
I don't know. We got to figure that out. We need the Raz. We haven't had the Raz on our show in probably over a month.
He's too busy at the Detroit's poly training camp,
Guy's so busy all the time.
To Detroit, what kind of camp?
The training camp, just over there, just hanging out, just with the players.
With the Lions, who've already fired their athletic trainer?
Maybe he can get them to win a little bit.
Yeah.
I think not bring this into a
Yeah, Joel said let's move forward. All right, guys. So I've been seeing in the chat a lot of people, of course, talking about SoFi. I mean, I don't think I even want to go there, but we'll skip
maybe
that
we do.
one. Well, you want to take a look at it?
Everybody on CNBC was telling me to buy this stock. I mean, there was everybody who's been pitching SoFi to me. I was like, maybe I should buy some SoFi. I still have not bought it. But when stocks are making new lows, I say you got to go. I don't want to buy a stock making a new all-time low. No, thank you. I want to see where it bottoms. So you do have a level. 1356. So if you want to take a flyer, that's where I'd stop myself out. You don't want to start making new lows on you again. It's a tough day, but you know what? We've had a couple. We were oversold on some stocks. Is this SoFi oversold? Probably. So this stock actually has the capabilities to bounce faster than stocks that haven't even started their sell-off yet, like Apple, which hasn't really sold off much at all. So am I coming in and loading up on SoFi long term? No, but if I was, I'd want to lean out on that 1356 low. So you can put any trade on as long as you know where your out is. My out would be below 1356.
And where did we spike to in the after hours? 1360. What's the low of the move?
Those levels.
Yep. 1356
levels, Joel. They work.
Yeah, that's all. Boy, oh boy, I don't know. I mean, yeah, you can use that. I don't know what the other lows are in this one. After that, I see a 1314. These are monthly lows, but That's it. I'll go with Triple D on that one. Did we cover? He mentioned Macy's. I know Spencer gets all excited about these retail stores. They had a big pop, but beginning to fade. I don't know, kind of no man's land here. Where we at? We're at 1909. Short-term traders, make sure this thing holds 1920. Pair of highs in that area. 1980 would be just a super juicy target. And then he mentioned Kohl's too, right? And I just want to do Kohl's real quick. Spike up and on its way back up. He got over 55. Is that nothing there? 55.65, your 4-day high. So I just wanted to cover those two retail stocks. Mitch, take it away.
All right, guys, let's go ahead and let's get into another area. Of course, I mean, department stores, apparel, I would definitely pay attention to maybe see if you get some sympathy in other names. Like, of course, you could look at Urban Outfitters, American Eagle, some of those
it's
kind
a
of
good
names.
Point.
Gaps, to see if you get some sympathy. You know, of course,
I'll
keep those on the radar.
Mitch. You know, you're looking at where do I want to be buying the dip today? Well, if you think Kohl's and Macy's are going to hold on, I think jury's still out there, but they're doing well. Maybe you're looking at the dip in Nordstrom this morning. Maybe you're looking at the dip in some of the other department stores. Maybe, you know, not Target because they're in Walmart because they've just got Amazon to a certain extent today. But I mean, you know, if you think this is a turnaround, and Spencer before he left was talking about, you know, Kohl's, Macy's potentially turning it around, at least in this quarter. Yeah, look to some of the other big retail names, maybe on the dip this morning. So, you know, and if the market turns around, it'll probably be those stocks that'll lead us out. If the market continues to roll over and sell off, well, everything's going to probably eventually roll over and sell off. But JWM's trading in the red right now. Should it be trading in the red with Macy's and Kohl's ripping higher? I don't think so. So I kind of like JWN down here this morning. Now, if you look at the chart, I guess you're coming into support too, Joel. You got a lot of support down there at 31 on Nordstrom. So
yeah, where you at?
32.30.
Yep.
If you're looking for a long, I don't know if I'm looking for longs, but
the chat says that we're talking our books here, even though I don't think none of us hold in these retail stocks.
Yeah, we rarely talk our books.
Yeah, I don't even know. Calm Meow says that. I want to know if cheese comes with that wine. I mean, you're welcome to go listen to CNBC and get their
we like you listening.
I mean,
the
you
can stay and listen.
We have so many
you
whiners
say what
in
you want to say.
Pre-market prep winer.
We don't have these. We're just talking about.
I have no position in Nordstrom. I have no position in Macy's. I have no position in Kohl's. I have no position in Walmart. I have no position in Target. I do have a position in Amazon, a long-term investment position, but no trading position in it. So, I mean,
all right, let's talk about something that I wanted to talk about today. And today is one of those days where you're seeing the SPY, you're seeing the Qs have that downside look to it. A lot of times when we get these downside looks, one of the things that I like to pay attention to is, yeah, you can be looking at certain stock stories today, micro stories. But if the overall market is going to kind of drill down on us, this is something that you got to keep in mind on trading days, especially for day traders like today. What do you guys recommend on days like today when you're looking at particular stocks, but at the same time, you're having that downward pressure on the spot?
I mean, it all depends with your positions and everything, but on days like this, with the down open, because I don't know exactly what's going to happen, but at some point they're going to have like a 20, 30, 40, point rally, rip everyone's face off, right? Shorts get overdone, but the close. I mean, I'm just giving just a real general thing here. Like if you're stuck in Apple, okay, you bought the breakout at 150. It's down $1.34. It's trading a little bit more than the market. So that closing price is just, a lot of people are marked there, people that took it home. So that's just like a general rule. If you're stuck on something, look at that close. And if you're looking to short, maybe there's something that closed near yesterday's low, had a, weak close right there. Maybe there's still like a latent bid out there from yesterday and you could get short near the previous day's low and you're not shorting it at the whole. There would be two things, but selling, some of these stocks, down in the hole like this. I mean, it has worked sometimes, but man, oh man, in this buy the dip market, it certainly hasn't.
I make a lot more money buying dips than selling dips. I'll tell you that.
Yeah. Yep. Yep.
Again, you can put on, if you just setting it up. If you want to be long like a Nordstrom or something today, you can turn around and sell something short against it too. And you don't even have to stick in the same sector with retail. The nice thing is when the volatility starts to rise, you can start to hedge stocks with just other stocks. When you're in stock pickers market, then you can't do stuff like that. But I tell you, when I'm looking at the board here today, I'm looking at all my stocks. There's not a lot of green on the board. There is a few gold stocks, like you were saying, higher here, Joel. But you're scrambling to find anything green here today. Estee Lauder, which reported, Nvidia, which reported, are in the green. Kohl's and Macy's are in the green, which reported, and like some gold stocks. But it's not a lot of stocks that are green. So stocks start to correlate much better when volatility rises.
Yeah, just to illustrate a point here, Target, new price target by Goldman Sachs. I assume it's a higher price target. On a day like this, you got more, on a normal day, if the SPOOs were up 20, they'd be
That would mean something.
Bye. Today,
that means nothing.
Absolutely nothing.
Yeah, news means nothing. And again, that we just were talking about this. When volatility rises, individual stock news becomes less important. That's just a correlation that is proven true for forever.
Just a segue here. I mean, hey guys, if you guys want to hear more about this, exactly how Joel and Dennis trade, check out this weekend, guys, August 21st, starting at 9 a.m. Eastern. We're going to have the professional trading by Joel Elconin, Rob, and Dennis. You're getting 3 traders to talk about their strategies, not only the way they prepare for the morning, but also where their edge really lies. So if you want to check that out, definitely Saturday. Guys, hit that link right here in the chat, and you guys can sign up, and I'll play a little trailer here to get us a little pumped for that moment.
And Dennis will have a new dance for that tune. Can't be the same one as a Tim Quast dance. So real quickly, Pfizer, we got a question about Pfizer here. Someone's been holding it for 8 years.
So have I.
Yeah, I bought it.
You got the same stuff. Are you been holding Pfizer for 8 years too?
No. This is like I kept on telling you that we picked this one up before earnings.
Oh, so
yeah,
you're a newbie on Pfizer.
Yeah, so
I think I've actually might have owned Pfizer for longer than 8 years. I believe I bought it back during the financial crisis. So like I might be 11 or 12 years on Pfizer. I think my average cost basis is, I think it's about 13. I think I'm in around $13. So if we go back to the charts, we could try to figure out where I bought Pfizer. I did sell part along the way, which obviously was a mistake because the stocks continued higher. But when did it trade $13? Oh yeah, you're going back to before the financial crisis. Maybe I've had this a long time. Go back further. I'm pretty sure my average cost basis is 13 on Pfizer. 2011 maybe 2010, 2011.
Yeah, it was under 15 in 13/27, July 2010.
Yeah, so I'm about 11-year holder in Pfizer here. So am I selling my Pfizer? Nope. I don't feel like paying the taxes on it, and I don't think it's going back to $30 or $35 where I'd be, indifferent, so I'm holding on to it. I like the stock. Don't want to pay the tax. Is it topped out yesterday? If I was in it for a trade, I would have dumped it yesterday. If I was in it just short term, Pfizer, you had a number of stocks, Regeneron too, which I just bought, fairly recently, but I designated long term and I like the valuation. So I held on to it, but you look at those and they were really getting pumped on news. This has been an incredible run for Pfizer. It is overbought. And yesterday's candle tells me that, maybe, whoever's buying at 51.86 yesterday is going to have some buyer's remorse. So I think you got a date with the mid 40s, like 45, 46. If I was looking at it for a trade to get back in, I'd probably look in that area. 48, 45, kind of in the middle of nowhere.
I'm not looking at it from that perspective. I'm just saying this thing has just been such a serial underperformer for 100 years, right? In this greatest bull market that I'm not going to try and pick a top on it. Yeah, it may stop out near the whole numbers. But the other thing I was thinking about this before it actually happened is what if like someone at one of these Moderna or Novavax? What if these companies, stumble? What? And that actually happened with Moderna. I just look at Pfizer. Is like a bigger, more experienced, longer term experience company, and it's just getting going. I don't have a price target on it, but it's got the momentum. It finally broke out. It finally made a new all-time high. So I'm not rushing out to sell it anytime soon.
It's been so if you go way back, Pfizer, believe it or not, was a $45 stock.
I know. I sold it back then too.
And it traded with a PE back then of like 45. You had a drug stock trading with a PE of 45. What's happened since then? The company has continued to grow and continue to dominate. But to get back to that pricing, because it was so ridiculously overpriced back then, it's taken 21 years of growth for the company to become a reasonably valued company. It was the same thing with Cisco. It's the same thing a lot. When you're paying 60, 80 times earnings, you better hope they keep those growth rates up, because if they don't, those stock prices come down significantly.
Kind of like Microsoft. I mean, how many years did that take?
Like 15 years, 15-year bear market for Microsoft. People don't, that just starting the markets. It's good to go look at a history lesson and look to March 2000. That's why we do this exercise. It seems like every couple of months on the show where we look back, because, when we're in a rip roaring bull market, you tend to forget the stocks can actually go down. Good companies can go down. Some of the best companies. We even talked about Amazon. Amazon had a 90% pullback after, I think it was down 96% from the highs in 2001 or 2002. After, if you go back, you can see it on Amazon. You won't see it on the chart because it's exploded.
No, they only go back to 20 years.
But if you went back, from where Amazon topped out in like March of 2000, or maybe it was July of 2000, some stocks topped out a little bit later. 2 years later, I believe Amazon from peak to trough fell 96%. Obviously, it's up thousands and thousands of percent since then. But you can have some significant drawdowns, when you're trading extreme valuations. And Amazon was another one that looked like at the time it might go to zero. It didn't. It was the one that survived. But there was so many online stores. Why was the online bookstore different? Because of Jeff Bezos. But, there was online toy store, online bookstore, and 9 out of 10 of these companies went under. But, obviously the brain of Bezos and expansion of, Amazon, took over, and that was the company to own. But it was hard back then. You could look at all these companies down 80, 90%. The NASDAQ went from 5,100 to 1,100. 80%. The index fell 81%, I believe, from peak to trough. An index. That's like the QQQs falling 81%. That's just incredible to think about. But the valuations were nuts then. We're not at that point. Walmart isn't trading with a PE of 50. Pfizer isn't trading with a PE of 40. There's a lot of stocks that are reasonably valued. But that's why I learned the hard way, growth at a reasonable price I follow instead of growth at any cost.
Yeah,
you want to talk China at all? Or Mitch, did you have something you wanted to
We
cover?
got about 2 minutes left. I don't want to jump into China. That's a long topic there. But definitely, I want to point out a couple of areas that I'm definitely seeing the market kind of pressure right now. We're seeing energy really get smacked down the last couple of days. Oil dropping down. I think that's another thing. I mean, last time we saw the market really make down moves is when oil was getting crushed. We saw oil go really high. I mean, I forgot what the price of barrel went up to, but
the futures went over 76.
There you go. Perfect. I always look at oil and I see like this $30 to $80 range. And so now that we're near that top of the range, I'm wondering if we're going down to the bottom of the range, and that could definitely drive us down for a little while. That's what got us in trouble, I think, last time when we saw the SPY really take a hit. So I'll keep watching on energy to see if we get some flips, or, I've been trading the drip a couple of days. That's a leveraged oil play, inverse play for you guys that can't short, like the only long. I just do the inverse play, right? I'll be watching that.
Good idea.
Towards the open. Another thing that I want to point out is Kroger's been ripping like a freaking monster.
That's
from
Warren
the
Buffett.
The Buffett push. I don't know if anybody has this one, but I think there's going to be a little bit of profit taking today. 2 big days like that in Kroger, you just don't get that often.
I'm kind of mad at myself because I love this stock. We know I talked about it multiple times. It was back at 32, 33. I played it once from 32 to like 37, then I never rebought it the second time. And it has exploded. Warren Buffett in there now, obviously adding to his position. So, that's been the Buffett factor that has pushed this price higher here. Kroger's absolutely overbought at this point in time. I would wait for a pullback if I was looking to get in this thing.
Let's go Krogering. It's not getting hit too. Holding up good.
Sorry about that. Just last thing I want to bring up, make sure that we get it out there. The initial jobs claims there for last week at 348,000 claims versus the 365 claims expected. So definitely the initial jobs claims starting to come down. A lot of people probably pointing towards the little extra incentive that's now taken away there. And people coming back to work. I mean, that's definitely a good sign for the market. We'll see if this continues to kind of trend on the downside versus coming back and giving us a spike, right? I know a lot of people were talking about maybe stimulus because of Delta. I don't think that's going to help. I don't think that's going to happen. So we'll be paying attention today to see if we get a reverse in the market. Up next, we got a great reopening stocks show for you guys. We're about to start on that. We're going to have companies like Safe, ALF. Definitely check that out. There's going to be some good REITs being mentioned there. I always like REITs because, I mean, you can a lot of times get some dividend and some extra income with these plays. So I'll go ahead and I'll leave off with that. What are your final words today, Joel and Dennis?
I think I'm looking. Oh, go, Joel. Go.
I'm just going to say, I got to hop. I'm going to cover. There was a bunch of stocks we missed in the chat. I'm going to go cover them at 9. For me, always the same thing. Looking for follow through the pre-market low. If you get that, I'm not going to get too excited because I see another low at 43.40, when they rip this thing, whatever that early morning low is. I always look for like a 50% retracement on the day as for whether it's stocks, futures, or whatever. So, all right, I'm going to hop. Great job, Mitch. Thanks for filling in, and talk to you soon. Triple D, give them what you got.
Always.
I think I'm the same thing. I'm just looking here. You know, obviously, I'm going to be doing my inefficiency trading when some stocks are down too much relative to where they are to fair value. I buy them when they're up too much relative to fair value. I sell them short. Those strategies work much better in an environment where, obviously, you know, the trading volatility has increased. You know, stock news doesn't become as apparent. So, got a little intruder there. He just left though. So. So I'm still looking same things that I'm normally doing. Long-term portfolio, which is still sitting with 35% cash. I might nibble into some more. Like I said, I bought a little bit of SMG yesterday. I am looking at a few others, you know, potential trades, you know, to add. I added to my GM a little bit. I had sold a bunch of GM when it got up to 58. So I re-added those shares that I had sold. So I'm back in a full-size position of GM here now. When it came back, and I bought that yesterday at 50. So it's below or 50 and a half. So it's below where I bought that yesterday. So just, you know, I'm looking at my cash allocation in the long-term portfolio, putting a little bit of that to work, but not going crazy. Not saying this is the best opportunity of all time because, you know, I don't know, you know, nobody knows where we're going from here. There's a lot of unknowns. There's lots of worries, but we also don't know that we're not just going to rip back higher. So if you got a lot of cash, nibble. That's what I'm doing. A little bit of nibbling. All
right, guys, that's going to do it for us. Like always, you can catch Dennis Dick on Twitter, Triple D Trader, and definitely get Joel on Twitter. I'm going to bring you guys over now to the reopening stocks. Like always, Dennis, we appreciate you and have a good trading day. Like always, now jump on over, guys. This is going to redirect you over. Check this out. Learn about some companies today. You could get some reopening ideas. I know that this is a tough day in the market, so this might be a day to just do some research. I'll take you guys right over. And like